Good afternoon, everyone. Happy to welcome you all to today's webinar. Thank you for being here as always. My name is Henrik Bick. I'm here with the communications team at the Music Business Association. Before we get started and introduce today's presenters, I just have a couple of housekeeping notes for y'all. For today's webinar, we will be using the Q&A function to ask all questions. So feel free to, as something comes up during the presentation, open the Q&A box on your dashboard by pressing the Q&A button, and that will allow today's panelists to take a look at what you're asking before we get to it at the very end. Also, if you'd like to connect with one another during the session, your fellow attendees, please be sure to change your chat settings to everyone. Chat should be open for everyone now at this point. Outside of today's event, we have a couple of exciting things coming down the pike from the Music Business Association. First and foremost, last week we opened registration for our next in-person event. That will be the Trust in Safety in Music Symposium on January 9th at NYU's Rosenthal Pavilion. If you visit musicbiz.org and go to the events section of our website, or if you scroll down past the news, you'll see the Trust in Safety in Music Symposium stand-in. That'll bring you to our landing page where you can register for the event, learn about our first announced keynotes, and get your trip ready for the Trust in Music and Safety Symposium. Beyond that, we are in full gear getting ready for Music Biz 2024. In case you missed it, our call for presentations opened earlier in October. You have about a month left to send in your ideas for panels and presentations to take place during the conference, which is May 13th to the 16th, 2024 at the JW Marriott Nashville. If you want to learn more about the conference, if you want to register for the event, get your badge ahead of time, book your hotel room directly on site at the JW, or send in your ideas for the call for presentations, musicbiz2024.com is your one-stop shop to do all of that. You can also visit our main website, musicbiz.org, for all of that information, or follow us on socials at musicbizassoc, ASSOC, on Facebook, Twitter, Instagram, and LinkedIn. And in the realm of virtual events, next week on Tuesday at 2 p.m. Eastern, we have the second in our three-part webinar series hosted in tandem with the MLC, Evolution, Empowerment, and Earnings, Making Sense of the Modern Music Business. Part two of that series, as I said, will take place on Tuesday at 2 p.m. Eastern and will be hosted by the MLC's head of rights management, Maurice Russell. We'll be talking about income tracking and some tactics to implement it into your industry routine. So grateful to, as I said, have you all here today. And I'd like to welcome our presenters from RoyFi. Please welcome Peter Harvey and Lars Murray. Thanks, guys. Take it away.
Hey, everyone. It's great to be here.
Hey, everyone. So nice to see some familiar faces on there. I can't get to all of them right away, but hello, everyone. Thanks for showing up. We've got a deck to present, talking a little about the space. We're going to talk a lot about what RoyFi does, how it works in the real world. We've got a bit of a no-frills deck, which we'll make available on request at the end. And the basic format, I think, Peter's going to run through most of what we do and why we do it, a little bit of how we got here, et cetera. And, feel free to ask any questions you want to ask, and we'll get to those when we get through. Anything else to add, Peter, before we get started?
I think that's it. Excited to share with everyone.
Alrighty, so I'm going to do a screen share here. Just want to check and make sure that everybody sees it. We good?
I think we got it.
Okay, all right. So let's see. I guess we're sort of there already. Thanks for coming. We'll just go straight into slide one. So we'll take it away. Peter, take it away as to what RoyFi does and why. We'll start to get a little with the why too. So.
Absolutely, yeah. So RoyFi is a financial technology company that is aiming to really provide capital and liquidity to rights holders in the industry. It's really important to note that the best way to do that, in our opinion, is to work with the partners that they're already working with. So, we are at our core a B2B partnership company, providing resources in the form of advances to artists, songwriters, labels, publishers, really any rights holder within the value chain. It's really kind of important that that we kind of identify what the difference between ourselves and a traditional advance is. And I think the main one is that we have absolutely no recourse on the catalog. We have no prepayment penalties, overrides, hurdles, retention of rights of any sort. It's very transactional. It's very transparent. We're able to come into a partnership with a company and provide all of the necessary technology. We can provide all of the requisite capital to fund these advances, and we have a number of different ways to work with partners, from anything from just placing a link on a site all the way to a full API integration, where we can provide advances in as little as about 4 clicks, and fund advances in about a day. The core of what we're trying to do, though, is to remove the smoke and mirrors of these financial transactions for rights holders, by being dedicated to flexible solutions, transparent deals, and actually having the rights holders' best interest in mind. And that's really the wrapper of what RoyFi is. It's a company that kind of serves the needs of rights holders, to provide them with the liquidity or the money that they need to get from where they are today to where they want to be. I don't know if there's anything you want to add in there, Lars, from your perspective, but I can then jump into kind of our origin story and my history if it's appropriate.
Yeah. The one thing also, we've been going to conferences. We've probably met with a lot of people who are on this call and everything. And I just, wanted to underscore that this is a very new space. There are other players in the space. We're one of a few. I think we're pretty well differentiated. But one of the things that I think is really important is that everybody kind of understand that this space exists. And what's one of the things that we're really committed to, as a company is helping expand the knowledge among the constituency, whether it's indie labels, whether it's artists, whether it's publishers, that this stuff is available. Because we've been going, I've been working with Peter for about 1.5 years, and we're still explaining to people, what we do. And essentially it is a utility to fast forward cash, so that people can use it for their careers. So anyway, now I will not talk over you anymore, and we'll head to slide number 2. So, which is the mission slide. So.
Absolutely. Yeah. So before we jump into our mission, I'll kind of give the backstory of why I started this company with my co-founders. My background is not the music industry. And if you ever find me on a karaoke night, you'll completely understand why the industry is not welcomed me with open arms with regard to a recording deal. So my background being traditional finance, started off at a hedge fund, then worked for a multi-billion-dollar single-family office running their entire investment portfolio, and then went and ran about $30 billion worth of institutional capital for various pensions, endowments, foundations, universities, you name it, kind of the blue chips of institutional wealth. And it was there that I actually started looking into intellectual property investing, and spent quite a bit of time actually in the healthcare space, working to acquire rights from research scientists. And this will make a little bit of sense when I give you the overview of how the pharmaceutical industry works, which is you have a research scientist who works at a university, develops a drug, patents that drug, and then sells it to a pharmaceutical company to run it through the FDA approval process, and then bring it to market. And what they get on the back end is a royalty. So it kind of looks a lot like the artist who signs with a label and then generates a royalty on the back end, with a few major differences. But the key to it was I really liked the space, really like and understand royalty investing. And while we were acquiring these rights, a very large player in the Ontario Teachers Pension Plan also found the space and basically launched their own team and bought all of the liquidity in the market, vis-a-vis, maybe Blackstone, KKR, and Hypnosis over the last couple of years. Similar situation. So what I did is I said, okay, what else looks a lot like pharmaceutical royalties? And I'm a music lover. I'm a music consumer. As I mentioned, I am not a music creator. So I said, okay, well, what does music look like? Started looking at a number of funds that were acquiring rights and kind of walked through the first couple of steps of due diligence there and said, okay, well, what this is great for the blue chip artist. Or somebody who has $1 million or $2 million a year in royalties. This is a good outcome for them. But what about for the rest of the creator community? And I got introduced to my co-founder Don Griffith, who'd been providing advances to artists for a number of years, and I got to learn a little bit more about what is available to an artist that's making maybe $10,000 a year or $5,000 a year, and what their options are if they need liquidity for anything, whether that just be a life event or, more importantly, what if they need liquidity because they want to invest in themselves? How do they take themselves to the next level? And I kind of got to learn a lot about the incumbents in the market. And I think the net takeaway is that, the advanced world in the music industry looks a lot like the payday lending world in the rest of the world. And so I said, okay, well, I understand the risk associated with these advances and with the underlying copyrights. And if I understand the risk, then I can price what the cost of that money should be. And so we went through that exercise, and lo and behold, it was about 50% of what the market was charging. So I said, okay, great, we've got an opportunity here. So then, okay, how do you do this at scale? And that's where my other co-founder,
I just
Corey
want to
Whiting,
underscore
comes
the
in.
opportunity. The opportunity was you could basically do it for half the cost that it was being offered in the market. Yeah. So
And with significantly better terms as well. I mean, you don't need to set up what is in fact, uh, a factor. You don't need to set that up as though it's a purchase of rights or a predatory loan. And so that I think that the structure also matters, but that's a little bit more nuanced, and we can take that offline a little bit if anybody's interested in diving deeper. But to the scalability point of all this, which is where my other co-founder Corey Whiting comes in, we said, okay, well, we've got to figure out how to wrap this in technology. Otherwise, we're going to be in the same boat as the banks, which is, it just doesn't make sense for us to do these, for anything less than $50,000 to $100,000, and that excludes a large portion of the creator economy, and that's who we really want to serve, because at the end of the day, copyrights in the industry that have been generating royalties for a period of time are absolutely bankable assets, and that's the gap that we're trying to close. So until the banks want to come down to $10,000 loans to artists, we'll be there to bridge that gap, and be able to provide a non-recourse option for artists to get the money that they need. So with all of that, what we're trying to do is really democratize the access to capital for rights holders. We also feel very strongly about the value of rights ownership and the ability for rights ownership to compound and result in sustainable long-term wealth creation. And again, as I mentioned previously, we want to do this in partnership with those entities, those independent labels, those distributors, those publishers that actually want to see their artists succeed and just need the resources to provide them to get them to the next level. So with that, we're a great way for an independent label to find a budget for an artist that they really want to work with, but they don't have the budget for. so that they can actually run that artist through their label services program and help them, take that advance and actually deploy it into their career, or into the right endeavor for them. And that's, again, that's what we're trying to do here. We're really just trying to provide the resources for artists and songwriters and again, even labels and publishers that own rights to invest in themselves in a low risk manner, so that they can in fact get to the next level.
So I see some questions coming in here, and we will take them at the end. So thank you. Keep them coming. Um, so Peter, are you anything else on this one that you want to keep going on?
I think I guess the takeaway from that is, if you're a distributor, publisher, label, and you're sitting there saying, "Hey, I don't have too much money right now. If at all, resources are a constraint for you to grow your business, then I think that there's something for us to do together, because at the end of the day, we can provide that growth capital for the artists that you want to work with, so that you have that budget, and that both moves you and your artists forward. We'll
Yeah,
kind of leave
so
it with that.
well, and coming up, I want to talk a little about why I'm involved too, because I met Peter about a year and a half ago, and when he laid out to me what he was doing, I was honestly very skeptical at first, that it could be done, and because I was like, why hasn't anybody else done it before? And I think a lot of it has to do with being mission driven. But what attracted me to the proposition here is that we spent a lot of time in the industry, done a lot of marketing and strategy, but one of the first things I learned in the industry was getting paid, and getting paid in a timely fashion is the number one issue for anybody at every level. Doesn't matter if you're a label, doesn't matter if you're a distributor, doesn't matter if you're an artist, publisher, songwriter, you're always having to wait for that. And that can be the difference between making and breaking a career. So, what I saw here, in the space was something a little bit different, which was the pure play of just providing the service. And that's, as someone whose primary hustle is in podcasting, this sort of dragged me back in, because I think, this model is a little bit different. So, and I think another thing, Peter, that we should mention too, is that according to this mission, and the mission is very important to the company, we're also very much interested in pushing financial literacy among the constituency. And again, could be somebody starting their own label. It could be somebody, it could be, mostly it's artists, but making sure that they're smart and they know what their options are. And just want to shout out to somebody we're working with, who I think is on the call, Salinas Barrington, who's made this her crusade, sort of financial literacy for artists especially. So,
Yeah, absolutely. I'll actually piggyback onto that, Lars, as well.
Yep.
With financial literacy, that's something that is going to be a compounding effect for creatives in the industry, because with that, you start to understand these deals. You start to understand the difference between what an advance is and a recoupment rate versus a fee. A lot of times, nobody ever explains to an artist how much they're actually going to have to pay back. They just say, hey, you're going to take this advance and it's going to be on a 50% recoupment. Well, we think it's really important that artist in that scenario understands that, say that advance is $100,000. Well, that means that they're going to have to pay back $200,000. So, that's something that can, that's kind of small, but at the end of the day, that's core to a lot of capital providers in the music industry's business model, is that, in fact, their audience and the consumer doesn't know how to do that math. And, we don't believe that that's a business model. We believe that that's that's kind of a predatory practice. And, it's one of the reasons why we never will do that. Every single situation where we do an advance, the artist explicitly knows what is the full amount that they ever have to pay back. And more importantly, that amount can never increase. It can only decrease, which is a really important function in our advances is that we've baked in that you never have any risk of prepayment. Where others charge you a fee to get out of an advance, we actually reduce our fee, and couldn't be happier to see you get out of the advance and go and move forward, whether that's that you have the money to do that from another endeavor, or you've taken an advance, you've deployed it in an intelligent way, and you're streaming earnings, or your writer's share is going to recoup that advance significantly ahead of schedule. That's a great outcome to us. We don't think that creators should be punished for good outcomes.
And we've got that's part of the use case that we're going to illustrate as well as we go on. So, so this all sounds really great. How do we actually do it? So, there are some ways that we're different, and there are some ways that we pass on our savings to the consumer. So, Peter, take it away.
Yeah, absolutely. Again, one of the keys for us is that we're working with companies, so we don't have a massive marketing budget. When you see somebody out there just completely painting the town with marketing, you have to understand that is inevitably going to come back to their clients in the form of a higher price. We've taken the approach that we want to partner with companies, because that's going to give us access to their clients, and therefore allow us to keep costs down to both their clients and themselves, so that they can actually provide a service that doesn't have a 50% hurdle on it. We also come from finance, so we've engineered a significantly lower cost of capital for our company, because we're not originating for a private equity fund or a private debt fund. So we hold all of our advances on our balance sheet. We're taking risk. We're not just originating and shedding that risk off to our investors, which allows us to be significantly more patient, more long-term thinking, and also more market based with regard to the way in which we price our advances. We also have an option where, if for example, money is not a constraint and this is a service that you want to provide, we're at our core a technology company, and we've built our platform so that it can be leveraged in a SaaS model, where we're not the funding source. You can come in and set your own parameters using our algorithms. We're happy to prove those out, and then you can sit there and be the advanced provider to your own constituents, and have a lot more control over the terms and structure, to better fit your own model. And then, as I mentioned previously, our integration and our technology is, I think, a really, really strong point for us. We can do everything from just a pure referral program all the way to a fully integrated, soup to nuts advance offering that is completely white labeled, sits within your platform, and like I said, can provide an advance with funding in an advance and an agreement in about 4 clicks, and funding within 24 hours. We work with partners across the board on those different levels of integration, and we don't have a preference. It's really, what is the preference for you, and what makes the most sense for you. We can have a tailored experience that is completely branded with just a link on your page, and we'll maybe jump to the next page just to kind of give you an idea of what something could look like, if you're interested in a white labeled, either iframe or just a custom built white labeled page as the lowest level of integration, and we can go all the way up the ladder to fully integrated.
I do want to interject one thing before we go to the next page, which is that and this is for the lay people who might be getting lost a little bit in jargon. We don't replace any relationship that exists. We actually enhance. We're here to enhance relationships. So, if it's label to artist, we are standing outside providing the capital and the technology for that. If it's distributor to label, same thing. If it's society to a publisher, same thing. If it's a publisher to a songwriter. So we can be in the middle of any of those sort of revenue stream transactions to speed up the cash and bring our own capital. We don't want to become any of those things. And we don't have an interest in becoming any of those things. And I think that's really important as well. What we do is we reward our partners for those referrals. So a little bit of the fee that gets charged, goes back to the referral partner. And that's how we reward our partners. But because we are a lean company, we are still able to pass along the rates and terms that are favorable. So, but going a little forward, we are actually working. This is not vaporware. It's not speculative. This is an example of this is just a screenshot from a fully integrated thing, which you can go and find, with a smaller distributor that deals with a lot of independent artists called Beetroot. And essentially, because we are integrated fully with Beetroot, we're able to get the money through if you qualify for it. And how many clicks, Peter?
About 4.
About 4 clicks, because if you click through this, and we're not going to take you through the whole process, it will basically tell you how much you're eligible for. It will allow you to select how much you want to take. It will tell you how much that is going to cost over the term that you want to take it. And then it will actually approve it and start the money coming on your way through ACH. So, this is real. It exists. It's very fast and it's very simple. If we work with a partner who's not fully data integrated, which we are very capable of doing, we can still also provide those services. It's just not that sort of instant 4-click thing. But Peter, how many of those are you doing right now?
Oh, we've got over about 10 live partnerships with various distributors and labels, where we have a low touch integration that's not fully integrated. And the benefit to all of those partners is, say that your A&R team goes and finds an artist that they want to bring over, and you just don't have the budget, but they're saying, hey, we need a $10,000 advance. We can step into that funding position and help you to bring new artists onto your platform without any financial risk to you. We actually expand your margin for that user slightly because of the revenue share. And then, because we're collecting then and stepping into the payee position for that artist until they're recouped, that artist is going to be there for the next X dollars of royalty income, which means that you also have a far more clarity in forecasting your revenues and knowing that you're going to have a stickier customer base on your own platform. So I think the letter of direction component is also a big de-risking factor for every partner that we work with, because it ensures that we're not competitive with you. Because at the end of the day, we can only work with the artists and the writers that are on your roster that you want us to, because we're not going to provide that advance without a letter of direction from you. So I think that's an important component as well, and really underscores how we're trying to be complementary versus competitive with all of our partners.
So how does this work in the real world? We kind of want to run through a real world example of how an artist used RoyFi to invest in themselves, and what exactly happened when they did that. So, you want to just sort of lay the groundwork for this, for where the artist started out, Peter?
Yeah, so absolutely. So this is a real artist. For the purposes that we're actually showing their earnings, we will keep them anonymous. They've given us approval to use them as marketing collateral, but we also do like to be respectful of people's personal finances and keep them anonymous. So this is an artist that actually had just come out of a major label deal. I would say that it was a major label deal that did not work out as expected. They still had some back catalog that was not included in their deal, and they were effectively living at home and sleeping on the floor. But they still had a dream, and they still had the mind that they wanted to get to the next level, and they'd actually started scraping together everything that they had to put out their next project, which was a weekly 20-part series with both audio and video to their fan base. But they needed, what I would call finishing capital to put the final touches on the project, to shoot some videos, and most importantly on the first advance was just to buy themselves the time to roll the project out to their fan base. And we can jump in, Lars, and go to the next slide.
The other thing to make clear also is that they had retained some ownership rights to masters prior to their major label deal. And so that's, that is, you call it a catch, but it's a qualification. And there are a lot of artists out there like that have indie stuff that they have access to, that they can tap into. And we were able to suss out that the artist was eligible for how much over what period of time?
Originally about $15,000 over a 2-year period was our base expectation.
Yeah. So that was the eligibility, and that is what they decided to take, correct?
Correct.
So when that person took the RoyFi advance, here's sort of what happened. And there's a very interesting timeline here. So
yeah, it's kind of perfect. So what we're looking at here is their actual sales data. We've kind of cleaned it up to just some of the major stores. But you can see that they took their first advance in December of 2021. They were muddling around kind of the 800 to $900 dollars a month in earnings. And immediately upon launching the project that they had kind of in the wings, you can see that they had an absolute spike and an incredible response across all stores. And they ended up paying back that first advance that we expected to be a 2-year advance in 6 months. And we're eligible for double that, when after they had recouped. And at any point in time, even before they had recouped, they could have come to us and taken out our advance at a lower dollar value, because we have those breakpoints in where, if you prepay, whether it's with a new advance or outside money or organic performance, we're going to reduce our fee. So, first advance went into living expenses, went into marketing, and went into the release of their weekly campaign. And the results were incredible. And they said, okay, well, that went really well. How do I do that again? And how do I double down? And they had great engagement from their fan base. They said, okay, I want to take another advance. They took $30,000 and started working on their next project and getting it ready to roll out over the next couple of months. Again, recouped that advance in about 6 months, 7 months, and then deployed the proceeds of a third advance into the rollout of that project. And you can see over the course of 3 advances, this artist 10x their earnings because they invested in themselves and they owned 100% of these rights. And that's the power of making that bet on yourself. So, I think that's a really strong example. And, we don't require an artist to put the money into their career, but we can see the value of an artist putting the money into their career. And, it's part of working with partners that have the ability to provide those value-added resources. We can help give you as the company, some of those resources to help get your artists to the next level. And, this is an independent artist, actually through a DIY distributor, but say that this was an artist that was with a with a more hands-on distributor. Well, and say that they were on an 85-15 deal. Well, that 15%, which would be your company share, would have 10x'd as well, and that's a really, really great outcome. So I think it's really really illustrative of the power of self-investment and keeping resources within someone's career.
So yeah, so that, I mean, that right there is about it. It's very, very simple, the way it works. Integrations are very lightweight, partnerships are very lightweight. We can walk before we run. There are a lot of different entry points. Again, with a full data integration, it's the most powerful, but it's pretty powerful without that. So I think if a couple of things. One is people have asked about who to contact to see if we qualify. It's right here. What we're also looking for is word of mouth and partnerships as well. I think even though we are looking for larger partnerships primarily so that we can scale out the business and reach more people, we are actually accepting walk-ins as well, and that's what Peter was referring to, where he's got about 10 deals going at any one time. So it's possible to get your hands on this now, and that's at royfi.com. And if you're a distributor, if you're a label, a publisher, who wants an actual hands-on demo of the thing, we're happy to schedule those as well. And then I guess, there are some questions we can answer, what's up there already, and please keep firing away, ask us the tough questions. That's the part I love the best, because, Peter has really thought this out very, very well. So do you want to start with Canada?
Yeah, absolutely. So the short
Couple of
answer on Canada is yeah, we definitely work with Canada. We can work with both artists and companies in Canada. And with regard to minimum requirements, it varies. I would say that our minimum requirement is about $2,500 a year in consistent earnings for a non-integrated partnership in advance. That's at the artist level. And then, for a fully integrated partnership, I mean, we can go down to as small as $250 as far as advance size. Once we have a partnership in place with the company, we can get pretty small and pretty granular. And again, if we're going to talk about the low end, we should also talk about the high end, and we can go into seven figures as needed, and as a catalog supports it. I will say that once you get to seven figures, there are better places to go than an advanced company, and we would love to help you make those connections. That's not to say that we can't do the deal and that we can't work with you. We would just say, if there is an opportunity to get you a better cost of capital, we would like to do that and help you to do that. Aaron, I'll answer your question as well, which is, what are our roles? Maybe we should have been a little bit more clear about that in the introductions. And so I'm co-founder and CEO of the company, and Lars is our head of business development.
There's actually, Peter, I wanted to throw another piece in there that, we go down to 250, but sort of rule of thumb, a constituent needs to be generating about $2,500 a year in any particular royalty stream, whether that's publishing, whether that's masters, whatever. I think the other thing that we didn't point out, and this is pretty important, I think we're the only people in the sector who are doing publishing deals, in addition to masters. So
definitely in an automated manner. I think also one other thing to mention is that we have no affiliation with or no business partnerships in any way, shape, or form with any entities that are either brokering or acquiring catalog. We think that we don't operate in marketplaces, and we think that if we do that because if you are in business with rights acquisition, at the end of the day, then you're highly incentivized to over lever the artists and kind of put them in a bad position, because it facilitates another avenue of business opportunity. And we kind of, for conflict of interest purposes, have completely avoided any sort of involvement with brokerage or acquisition of catalog.
So I'm sorry, there's a loud plane flying over, but Travis had a question there, Peter. I don't know if you saw it.
Yeah. So I got a question from Travis on label accounting here. I have an artist who sold a split of royalties a few years back to a private investor. He has approached us about buying the share out of Master and Pub. What do you do financing for, or would we do a financing for an artist to do a buyout like this? And the answer is yes. So we can definitely be part of this transaction. It really is going to matter, whether or not, what the catalog looks like and what the acquisition price is, but we can definitely be a part of that conversation, and we'd definitely be interested in looking at that sort of an example. We've got one. What stage should your business be at before they're eligible for this? And the short answer is, we work with very small distributors that have a partnership with an aggregator and a few labels. And that's something that we can work with. As we mentioned, our integration can be as low touch as just putting a link and then onto your website, and then from there, what's going to determine whether or not we can work with you or your artists is what do their earnings look like, and is it something that fits within the profile of an advance that we want to give you. So we got one about whether or not it has to be royalties or if it's any sort of revenue stream. So right now we're looking at really predominantly master and publisher publishing royalties. Both, if you're a publisher, and you have your own publishing company, we can obviously combine both publishing and publisher and writer share, or we can, if you just have a writer share, we can work with just the writer share as well. But we're not currently doing tour finance or anything along those lines. But what we will say is that using your royalties to finance a tour or merch is actually a really great use case. If you have the fans to get out and run a profitable tour, because those are places where you can deploy your resources and or an artist, or help an artist to deploy their resources in a really positive manner. We've got one about, do we work with African artists? We do. We have a number of clients actually that are in various African countries. The key for us there is where do they distribute through? So there's a number of different factors that go into working with artists that are in various countries. The first and foremost is being a U.S. company. There are certain withholding taxes associated with advances, so it's just another part of the deal that has to be contemplated. And then at the end of the day, what we really need to get comfortable with is where is your company located? Where is it domiciled? Because that's where enforceability of contracts comes into question. But short answer, yes, we work with artists in Africa, and specifically Nigeria. Another question about international. We do have artists in Australia and New Zealand as well to answer Lisa's question.
Peter, can I take the how do we get into the finance side a little bit?
Absolutely.
So Aaron, Peter laid it out earlier, and if you joined late, but he comes from fund management and the finance side, and came into music because I'm going to paraphrase here, Peter, so correct me if I over paraphrase, but because he felt that music industry revenue streams were a better asset class than they were getting than artists were getting credit for, and that he could come in and do a pretty good business in the market, putting money, fast forwarding cash into the hands of artists at lower rates, and still have a very sustainable, workable business. For me, I got into it meeting Peter randomly at Music Biz last year, literally sitting across a table, having discarded my last music industry consulting client and saying, I don't think I'd want to do any more consulting. And then again, as I mentioned earlier on the call, if you weren't on the call, I was very, very skeptical of Peter's value proposition. And I think he would be the first to say that I really asked him some very tough questions. And when he answered them, and with a lot of the reason, this is why we really put a lot of emphasis into why and how this company is sustainable. We've seen a lot of companies come in. I've seen over 30 years in the industry, a lot of companies in various sectors come into the industry with very sketchy propositions, and basically asking people for their money, or fine print and hidden fees and things like that, or just unsustainable things. And this looked very, very stable, maybe a little unsexy, but very very sustainable. So I kind of came in because I dealt with royalties very early in my career at an indie label, literally processing royalty reports and wrestling with data and wrestling with dating and how long it takes to get paid. My first boss's first lesson to me was the worst thing in the world you can have is one hit, because you will never get paid if you don't have another. So we're trying to put some dents against that. And it's a lot easier to get paid now than it was when I first started doing this. But the answer is, Peter's been in it and is coming into the music industry with a very fresh eye. And I've been in the music industry with a very jaded eye and liked what I saw. So.
Yeah, absolutely. And just to kind of jump on that, one of the things that I really saw when digging into the numbers, is that the providers of advanced capital, in the market that I had seen, were really underwriting advances and pricing them as though they were, taking artist credit risk. And that's important because nobody who provides advances is taking artist credit risk. So therefore, you don't have to price this as though you're giving a credit card loan to a subprime borrower. That's effectively what was happening. And that's why people were charging, 50, 60%, and higher, call it APYs. So, if we want to put it into credit card terminology. So when I saw that, and you understand that you're not getting paid by the artist, and you don't have to chase the artist for these payments, you realize that there's fundamentally a disconnect between the way that artists are being charged and the underlying risk associated with providing them these types of advances. And that's the cornerstone of our business, is basically saying, just because we can get away with it because the artists don't do the math, that's not good enough. What we want to actually provide is a useful service that we can use to empower, rights holders to move their careers forward and be a part of that value chain, as long as we're providing them value, until the point where they no longer need us because they haven't been, taken advantage of throughout their entire career, and they haven't had rights taken away from them, or they haven't been forced into a catalog sale. And that's, at the end of the day, the mission and the ethos behind what we're trying to do is, we're saying, hey, you have great assets. It's crazy to us that banks won't come in and provide services to you, because at the end of the day, any small business in the world that has been generating income for 3 years at a constant level can go into their community bank and get a revolving line of credit. Until that's the case in the music industry, we will be able to sit here and continue to push pressure on pricing from where it is today all the way down to bank rates. And that's really what we're trying to accomplish at RoyFi.
So there's another piece too that I want to put on the other end of that, which we really didn't emphasize, which is that we're also very, going back to the financial literacy and sort of career literacy piece, we're also actively pursuing deals on the other end so that when you take funds from RoyFi, they will go further. So we have completed and we've explored and completed deals for things like hotels, wholesale hotel rates for people who work with us, or advertising, advertising that'll help you, if you use an ad service to further your career, that will actually help you pay back or help you recoup, spend to recoup programs, things like that. So, this is a very nascent part of the business, but it's also part of the mission, which is to not only provide the dollars at the best rates, but also to help people get services at preferred rates as well, so that their money that they do take is going further. So there's a crypto question here. So I've got a pad
Absolutely.
here.
No, I'll take the
I'll leave
crypto
it to the
answer.
finance guy to answer that. So
Yeah. So the short answer is we haven't had much incoming on whether or not we can fund in crypto. I will say that's kind of the overarching demand that we're seeing from our clients is not, hey, we really want this to be funded in Bitcoin. What could be really interesting, with the appropriate regulation, is using crypto and actually stablecoin functionality to significantly reduce transaction costs internationally. And that's something as a business that we're really interested in. Again, cost savings that we can realize at the business level effectively just filter down through to the artists and further reduce the cost of doing business. And that's something that we're really interested in. So I'll leave it there on the crypto front. I have personal opinions on it as well, but
well,
we'll leave it
I
there.
mean, I'll share a personal opinion about it because I'm not the CEO, but I think part of the getting it done and being straightforward and being maybe less sexy but more effective is making sure that everything that we're doing is firmly planted on the ground. So I think while crypto has a lot of very positive attributes and potentials, it's pretty volatile right now, and we're trying to provide services that are very, very safe and ironclad for both our partners and for the people who take the advances. So it's what I call the Joe Friday.
Absolutely.
So,
Well, I think at the end of the day, crypto asset risk is something that should be the individual with the money's personal choice and decision, not something that we want to push somebody into. But there's incredible functionality for cross-border transactions to get significantly more effective and efficient.
which is a better answer than I gave. So, any other questions while we're here? Oh, here we go. That's a great question from Ben Stouffer. So,
Yeah, Ben, absolutely. So, we're not currently raising capital right now as a company. But as I had mentioned earlier, we're not an advanced origination platform. So we do not raise investor funds from individual investors. We're not an exchange of any sort. So we actually originate every advance, and we hold every advance on our balance sheet. So the only way to get access to RoyFi advances is to be a investor in RoyFi, the company. that would obviously require certain levels of accreditation to be an investor, and I'm happy to have a conversation offline, and I'll respond to your comment directly so that you have my contact information. It's also on the screen currently.
And that's, that model um, is very crucial to the mission of the company, that, we are providing, a pure financial service and not beholden to, investor return demands on any particular advance that we've put out there. We're not collateralizing the artist. If those things, if we're actually doing an investment on a stream by stream basis, then you get into a more dicey proposition, and
Yeah,
potentially less friendly.
it also
So
create it also creates a misalignment of interest at the end of the day. Um, if we were originating, say that we raised RoyFi Advance Fund One from a number of investors, and we had a situation where the terms of that investment vehicle were, we want, we have a 8% pref, and then we have a 20/8 hurdle, where we earn 20% of everything over an 8% return to the investors. That puts us in a position that incentivizes us to provide a worse priced product to our artists, because we're not really trying to build a company as much as we are trying to generate a return on the fund for our underlying investors. And that kind of puts the clock ticking on us if we were to do that. And that's a position that I think a number of other people in the industry are okay with taking, and are fine being in. But our view is a little bit longer dated. We don't have any VC money on our balance sheet, and that's on purpose, because we don't want to have a clock ticking that says, hey, we need to exit this fund in 4 years, which means that you guys need to rip off as many artists as humanly possible so that you can generate a great return for us, give us our money back, and we can decide what we want to do with it. That's just not the way that we wanted RoyFi to be structured.
So there's another question and a comment. Thank you for pointing out Artisto Wyckoff. I will answer the question directly, which is that RoyFi isn't a label, and our expertise is in finance and providing financial services at the most sustainable rates, and we're not an A&R company. We don't have an A&R function. We will help people who do have that function. And it's not everything to everyone. There are hundreds and thousands of labels who are investing in people who bring in far less than $2,500 a month. That's what they're labels. And more power to them, and they're great, and we're here to help. But the focus of this company is something that's very, very important. So I think all of your concerns that you mentioned in the chat quote are very real. It's just not the business that we're in. So a couple more questions from Denny Robinson.
Yes, we have a question. Do we distribute advances overseas or just the U.S.? We are overseas. Again, a couple of things to consider. Being a U.S. company, we are required to withhold to certain countries where tax treaties are not in place. That can be anywhere up to 30% of the proceeds of the advance. Just something to keep in mind with regard to international advances, but we do work internationally.
Yeah.
And for Perry, yes, we can integrate this into a website for a distributor.
And that was Perry. I think just email Peter and or me. That the emails are right on the screen here, and we'll set up a demo. I'll show you exactly how we do it. It can be very, very simple, as little as sort of planting a referral, iframe, to full data integration, and we can start anywhere. So.
Well, it looks like we're getting to the end of Q&A here. I want to thank everybody for getting involved in a very lively discussion. And thank you to Peter and Lars for taking the time today to present really exciting stuff, and glad to have you here to talk about RoyFi. Really appreciate your time and sharing your talent with us today.
Absolutely. Well, thank you so much for having us. And yeah, our contact information is on the screen right now. I believe that this will be made available via the Music Biz website if anybody wants to share it with partners. But please reach out if you have any additional questions. And thank you all for tuning in.
Yeah, thanks everybody. And Denny Robinson, last thing. We don't have a demo link because we actually run our demos as bespoke because everybody has very, very different needs. We can't really peanut butter spread into a straight up demo video. Maybe at some point we'll have that, but these are, just hit us up for an email. We're happy to spend the time to show you exactly how it works and tailor it. So.
And Peter, you're right on the money. Yes, this webinar recording will be available on Music Biz's website. I just dropped the link in the chat. By end of business today, should be posted there for you to access. Like you said, if you want to relive some of the stuff that happened today or share it with your teams, feel free to do so. Thank you for everybody who tuned in. Thank you everybody for your questions. Really grateful to have you here for today's webinar, and hope to welcome you to the next one. And again, thank you, Peter. Thank you, Lars, for taking the time.
Thanks back, Henrik.
Thank you.
Okay. And thanks everybody
Take care all.
Okay. So long.
Bye.